To build anything that truly lasts, it takes time.
Sumit Bhatnagar, Fund Manager, LIC Mutual Fund, joining us. Sumit, thank you so much for giving your time to ET Now. And my first question to you will be on the texture of the market. See, at present, we consider that India at least is a safe haven amid tariff uncertainty. But one thing is sure, that Trump and the tariff implications and uncertainties will keep on growing. What is your long as well as short-term perspective for the domestic markets?
First of all, thank you for having me here. Uh, Insofar as global markets are concerned, see, we have been witnessing bouts of intermittent volatility led by both global economic factors and geopolitical factors. When we talk of Trump, see, this Trump issue has been going on for last 2, 3 months. So bulk of it is largely priced in, barring some short-term surprises that he may give basis the announcements on, say, a Mexico or a Brazil. But insofar as India is concerned, sound bites continue to be positive. Insofar as domestic markets are concerned, we think Indian markets are. Uh, uh, we think we are constructive on Indian markets per se, simply because we expect our economic activity to pick up. And with that, we expect pickup in corporate earnings as well, uh, backed by your lower interest rates, substantial liquidity, as also valuations which are more or less in pair zone, insofar as broader indexes are concerned.
All right,
While
let's.
while medium to
Sure.
long term view definitely remains very positive for India.
Sure, sure. So you're betting strong on India growth story, but having said that, I really want to know any sector-specific strategies because we are seeing a lot of churning around. So what's on your radar? The hits and misses in terms of sectors for you.
So, insofar as our sector preferences are concerned, we are increasingly turning positive on consumption as a theme. We think consumption is at an inflection point, backed by both improvement in rural and urban consumption. Rural, because of a very good monsoon that we have had so far, reservoir levels and higher MSP prices, we expect a significant pickup in or continued pickup in economic activity in rural. And with the tax cuts that have happened, which should play out in your economy over next 6 to 9 months, as also the regulatory reforms that RBI has done for non-lend for the lending institutions, rollbacks basically, and the lower interest rates, liquidity, all that should help in consumption. Also, over next 2 years, the pay commissions would be a key driver for consumption. So your central pay commission, which is due next year, and state pay commission year after that, should also give close to 3 lakh crores in the hands of consumers. And with the talks of GST rationalization uh, in the FMCG space, that should also help consumption in a small way. So overall, what we expect is that 5 years of underperformance in FMCG should be coming to an end, and next 2, 3 years outlook looks pretty decent for consumption as a space. While this quarter numbers may be muted, but we are positive on consumption as a space, and accordingly, we have increased our exposure to consumption in our portfolios.
Mr. Bhatnagar, hi, Ankur this side. You
Right?
would have just seen the numbers of WPI that is coming at minus
Yes.
0.13%. So we
Right.
are in deflation territory as far as wholesale price index is concerned, and
Right.
overall even CPI has been much below 4% benchmark.
Right.
I want to ask you, in the current scenario where crude is under control around $70, interest rate trajectory at least known, which are the areas or sectors where re-rating will happen or de-rating will happen conversely?
See, insofar as re-rating is concerned, we are positive on cement, we are positive on consumption as a space, where we can expect some bit of a earning trajectory pickup. Insofar as cement is concerned, if the pricing holds and in the second half, post your monsoon, demand picks up, there can be a possibility of an earnings. Consumption, like we discussed, second half, we expect a significant pickup in both rural and urban. So these two would be two spaces where we do expect significant re-rating going forward. While de-rating, it would be more in globally driven sectors like your IT or your metals. If the global uncertainty persists and the economic weakness continues in US, China, Japan, which are the key drivers of commodities like metals. So that would be my key de-rating sectors.
Okay, Sumit, thank you so much for all of those updates on the markets, giving your view on the domestic as well as the global front. Thank you and have a nice day to you.